All right, what is going on, Future Focus team? Back at it with another video. If this is your first time to the channel, thank you, welcome. If not, welcome back. The purpose of this channel is to educate and entertain you, but the ultimate goal of this channel is to make you just a little bit smarter today in order for you to have a better tomorrow. And with all that said, I got a special guest with me today. Hey, go ahead and introduce yourself.
Hey, what's going on? I'm Larry. I was in the Marine Corps for about 10 years, and now I'm a retail sales manager at AT&T.
That's what's up, man. So what questions you got for us?
Basically, I just want to get smarter at M1 Finance. I started it, what, 6-7 months ago, maybe, whenever you told me about it. And I don't know, I want to get better at it and get more invested.
All right, so
and
but
always have like complicated questions about it.
Yeah, so is it just the app that you're confused about, or is it just like investing in general, or picking stocks, or
both?
Both. Yeah, so first, before anything, man, you have to figure out what you want. Like, what do you want to get out of it? So it doesn't matter what brokerage you use. You know, this applies for any brokerage. They all basically do the same stuff. Obviously, I like M1 Finance. That's like my preferred one, especially since they offer that free Roth IRA. But honestly, like the stuff I think you have questions about is like more of generic, like anybody needs this kind of information. So like walk us through your portfolio right now. Like what do you have in it?
Like the total amount of money?
No, not money, just like what are you investing in?
So I've never invested before, and then whenever I started, I just did a little research and picked some ones. I have Apple, of course, Microsoft, Vanguard S&P 500 ETF, Johnson & Johnson, Coca-Cola, Disney, AT&T, Global Medical. What is that? RIT? R-E-I-T?
REIT. Yeah.
REIT, Pepsi, JP Morgan Chase, BP, Antero Midstream, and Anali Capital Management.
Okay. And how, like, I know you stopped for a long time. Like, have they recovered? How are they performing for you?
So I have 5 in the green. And the rest are in red. But on my overall, like what I put in, I have a gain of $2.11.
$2.11. All right. So, I mean, it's better than being totally in the red. You know what I mean? Plus,
right. And I also have a return of 99%.
Yeah, because you put in $1 and you started with that. No, I'm just kidding.
Right.
Yeah, but now you started, and I'm just glad you started. So now, before you even move further, you have to start looking at that portfolio you have and just analyze in there what you want to keep. So I would start with what's in the green, since if you wanted to sell any of that stuff, you wouldn't take a loss on it right now. So I would look at the 5 that you said you have that are in the green right now and see how many of those you see as an investment you want to continue in, you know, because I'm sure the way you felt about some of these companies when you first started, it may have changed. I'm sure some of these companies, you may not even know what they are or what they do. But if you do, then like obviously if you still like them, you want to hold on to them. So those 5 that you have in the green, we could walk through those. Like Apple, is that something you want to hold on to? Or do you think you have a big enough position in it to continue in it, or how do you feel about it?
It's my highest one. So I'd say, yeah.
Yeah. So like Apple, for example, you start looking at each and every single one, and you can start like analyzing, and this will help you, like doing research on the ones you already have will help you a lot in the future. So obviously this well-known fact, Apple is about to do a 4-1 stock split. So I don't know if you have a full share or how much you have of it right now, but they're about to split into four. So one full share will turn into four full shares, and this will happen shortly. So
That's what you were talking about the other day.
yeah, so what you have right now will be divided kind of into four as well. Because do you have partial? Do you have a fractional share of it? Do you have a full share?
I have $37.90.
Okay, so you have a fractional share. You don't have a full piece of Apple. You only have a fraction. So then you ask yourself, like, um, a full share is about to cost, I think, $100 something, and just ask yourself, like, do you want to continue to pay that for a full share, or do you want to take that $37 that you have and put it somewhere else? Because all those that you have in the red, I wouldn't sell any of those because you don't want to sell anything in the red. You don't want to take a loss ever, especially depending on your time horizon. So, how long do you plan to be investing? Like, is it 5 years?
I mean, I want to do this like for retirement.
Yeah.
Well,
So,
part of my retirement, like long term.
and that's great, man. So, if you do feel like that, then I would like, because right now you're operating on a regular taxable account. So, I would open up a IRA, a Roth IRA with M1 Finance, which is free, and I can show you how to do that as well. But that way, you have until April of 2021 to do the maximum of $6,000. So it's a minimum of 500 to invest. So you have to deposit 500. You don't have to use 500. You just have to deposit it, and then like at least all the moves that you'll be making with those first $6,000 you put, or whatever you put in until April, uh, any moves you make will be non-taxable. Because if let's say you go to sell some of those in the green for a gain, depending on how much your income is and how much of the gain you made from stocks, like you may be taxed capital gains, which is roughly anywhere between 15 and 20%, depending on your tax bracket. But you could sell and buy as much as you want in a Roth IRA over and over and over, and you won't be taxed on it at all. So that's the benefit of having the Roth. So if you see you made enough gains in a stock, you could take some off the table and put it somewhere else. And you don't have to worry about the government coming to try to find you at the end of the year during tax season, because all this money that you're spending is being non-taxed. Um, so do you have more questions on the Roth, or like, are you think you're already pretty set?
No, not really. I watched your video the other day, and it made a lot more sense. I always thought it was like just like an account you put money into that's pre-taxed or whatever, and then once you reach a certain age, you pull it out. I didn't realize you were actually putting it in like stocks, right?
Yeah, individual
You're
stock.
investing in something, yeah.
Yeah,
So
so
it's basically like my 401k at work. They invest in a bunch of stocks from AT&T, but it's not taxed. So when you pull it out, you get taxed.
yeah, so the 401k, the difference is that, for example, like you were in the military, so you know the TSP, they invest in
Right,
funds, and you can't control what stocks are in those funds. You know, they buy bonds
right.
as well, and right now is historically a bad time for bonds because they're yielding so low. So, right like that, controlling your Roth IRA gives you the power to just put your money where you want. I mean, it's your money at the end of the day, you know. So you're putting it in places you want to put it instead of them putting it in places that you don't even know, or companies you've never heard of and stuff like that. So all these stocks you're looking at right now
Gotcha.
in your regular portfolio, you could have those same exact stocks in your Roth IRA. However, when you went to sell Apple or Microsoft, you would sell them and not take any tax losses on that. It would be
Okay.
it would be a full profit. So
So you
at
can also lose money in it too.
lose money, I mean, you could, if depends on what you pick. Like if you're picking these companies that are
Yeah,
crash and they go, the only way you'll lose money is if you sell at a loss, or if the company goes to zero, like if they get kicked off the
gotcha.
exchange. So that's why you gotta investigate where you're putting your money. There's been incidents like Luckin Coffee where their stock was $52. They got caught under some fraud investigation. Is a company from China. There's been quite a few of them, and that stock went from $52 to $2, and they got kicked off the exchange. So people who were invested in it, who were paying $40, $50 for it, they got burned. They couldn't get that money back. So, but
Gotcha.
these are like Americans that are putting money into a Chinese brand that they've never heard of. All they heard was, "Hey, this is going to be the next Starbucks," and they're like, "Oh, hell yes, next Starbucks! I got to jump on it now." And they got burned the whole way. So, is
Nice.
it gets dangerous when you're like just following the herd and you're not really paying attention to what you're investing in. But like you have Apple, which is like a top tier company. You know, they're about to reach $2 trillion market cap valuation, the first company ever to do that. You have Microsoft, who has a lot of
Crazy.
you have Microsoft, who has a lot of money in cash sitting in their account. Um, you have a few, and it seems like looking at just listening, it seems like you were well diversified. Like you had stocks in different areas. You know, you had some energy, you had some real estate in there, you have your tech in there. So you're not doing the wrong thing. So the only thing that was wrong with what you did was you didn't feed those stocks that were red when they were low,
Right.
because you would have
When they
averaged.
were down, yeah.
So look at the ones in the red, and some of those, like if you are still interested in them, um, like pick one in the red right now that that you're still interested in.
Um, Pepsi.
Which one? Pepsi?
Pepsi, yeah.
Okay. So there you go. Pepsi, like you don't even have to go and research Pepsi. If you picked another one, I would have gone and like done some research on it with you. But Pepsi is a company that's going to be around. They've increased,
Forever.
yeah. So there's little kids every year being introduced to Pepsi, which equals more customers and more customers. Pepsi is in itself is super well diversified, and if we went into another lockdown, guess what? Pepsi would profit from that because they have like all the things you need for a place. Like, do you know everything that falls under Pepsi?
Not everything, but I know they have a lot of stuff, just like Coke. I have Coca-Cola too.
Yeah. So Pepsi, the reason a share of Pepsi costs so much more than a stock of Coke is just everything that falls under the Pepsi umbrella that people don't realize. So Pepsi has subsidiaries like Gatorade, like Nachos, like all these companies that are big within themselves, but they all fall under the Pepsi umbrella, and they have a bunch of them. And they're like set up to thrive in an environment where everyone gets locked down because everybody needs those bare essentials, like those chips and their drinks. So they go and stock up on this stuff. They've also, I believe, come up with a model where they're gonna be able to order their stuff online and it goes straight to your house. Like there's something they're working on. So if this COVID thing were to continue, lockdowns continued, uh, they're even making a plan for that. So that's a company that I would hold on to if I had it. So for example, with that company, I would just average down. So how much are you down on that company, on Pepsi?
29 cents.
Yeah, man. So even then, if you really want that company, then I would just, put some more money into it. And all you're doing is when you first bought it, you felt it was a great price to pay for it. And now it's lower. So obviously it's on a discount for you. So then you should buy more of it. So um,
Yeah.
Pepsi is also a company that pays a dividend. So they're going to be giving you money quarterly as well. The dividend isn't,
I was kind of
go ahead.
good. I was kind of confused on it until I watched your video from it the other day. Explained it a lot different. Like the whole Amazon one stock costs like some crazy amount of money, like $3,000.
Yeah.
So when you've invested in here, you get the fractional share or whatever.
Yeah, and you could just uh I don't know how you're gonna set up your account in order to invest. Like, are you gonna do some of every paycheck, or like what's your plan? Like you should do that first. Think about what your plan is before you even uh go into how you're going to work your portfolio, because the amount of money you're going to put into it will also play into how you put money into the stocks. So have you thought about that?
Yeah. Somewhat, but not really, because I just got a pay raise, so I'm trying to see what the actual gain is, like how much more I'll get paid, and go from there. Because I just switched, so I gotta wait a couple pay cycles to actually see what I'm gonna get paid.
Yeah, so if you were making good money at before and you were living great off of that, then you could even just take that pay raise, which it may not be much, but you could just take that pay raise,
Yeah.
make it like you never received it, and just take that pay raise and put it straight into investing. And it like, for example, man, like investing could be 20% of your paycheck, 15% of your paycheck, whatever that is, and that should be first before you pay your bills, before you feed your kids, before you feed your girl. It's called investing in yourself first. So you're putting your money, you're setting all of you up for your future because you're putting that money away. So when you don't have to work when you're 70 years old. My dad's like almost 60 and he's still working, because he wasn't prepared for it.
Yeah,
So
mine too.
I would rather, not that I'm struggling or anything like that, but I would rather put more money away now than live uh, like I have $1 million. Like some like when we were young, we would buy like these expensive cars and we would buy all this stuff. Like,
Right, yeah.
so now, man, I'm okay.
So
Go ahead, man.
my only thing is like, so like, let's say that I'm looking at my computer. Um, let's just say that I wanted to. I'm not going to, but let's just say I did want to get rid of Pepsi. But I just put that at zero, and
So
does that sell it, or does that just what does that do?
So click on the stock and it will give you an option. So you could buy, sell. Um, don't put it in
Right.
zero because if you put it in zero, what that does, it rebalances your portfolio. So it will sell it, all of it, if you change the percentage to zero. But what it's going to do the same exact time frame, it's going to sell and then immediately buy whatever you had, all the money you had in it. It will immediately buy and rebalance your portfolio to make it 100% again. So
Gotcha.
to avoid that, you click on the stock, you click sell, and then you could sell because you don't have to sell the entire. If you want to keep some of it, you could keep some of it. If you want to sell all of it, then you just click sell on how much is left on it. So whatever
Gotcha.
and you would just lose those 29 cents. However, the good thing is that the government takes care of you on that side as well. So that 29-cent loss, that'll be a tax write-off at the end of the year. You can write off up to $3,000 of losses in the market in your taxes. So if you did lose $3,000, you could go on your tax and they'll compensate you through that way. So
So it says for Pepsi. I'm just trying to understand this better. So I think once I completely understand it, it'll make me more comfortable with putting money in it. So it says right now, current value is $10.42. So is that what I have in
yes,
it?
that's how much you could sell.
Okay,
That's how much you could sell it for.
gotcha. And then the average share price is $143. So once I get my current value to that, I'll own a stock of Pepsi.
Yes, once you put enough money into it to get to that, you'll own a full.
Right.
Yeah.
I got you. Okay.
So if you wanted to put $10 a week, you would get a full share of it.
I got you. That makes more sense.
Yeah. So there's two methods, man. There's the method that I started with, which is dollar cost averaging, which means that you don't want to do any research. You don't care about freaking uh, doing homework or anything like that. You just want to put money in and forget about it. So, like some people are really busy, so they don't have time. Like I know you're always changing diapers and stuff.
Right.
Giving baths and stuff.
Facts.
So easy way to do it is dollar cost averaging, which means, again, every paycheck or every once a month, however you wanted to do it, once a week, you could put money into the market. So what this will do, the theory behind this is that sometimes you'll catch the stock when it's up, sometimes you'll catch it when it's down, but on average, you'll like get it in the middle. So you'll get the best of it. So there's like a little story that some mathematicians came up to because they did the research all the way back to like the beginning of the stock market, and they just said like if one lady would have put all her money down on the best times in the stock market, only the best times to put it in, and sold at the best times to put it out. And then you had a second lady who put it in at the worst times and pulled it out at the worst times. And then you had a third lady who dollar cost averaged. The lady who dollar cost averaged would have made out better than all of them because she always had money in the market, while the other lady, she was, timing it, and there was times where she did
Right.
there was times where she didn't have money in the market. So even though she made the perfect decisions, because of the times that she didn't have it in the market, she still missed out on gains. What I do now is something called price cost averaging, which is the same concept. I still take money out of my paycheck every week, every 2 weeks, but I pay more attention. Like I actually do homework, I do research. I don't want to. I feel like every dollar is valuable to me, so I don't want to just put down any dollar on something if it's not a good price to put it down. So I have more time, so I pay attention to it, and I actually want to know where my money is, and like if it's not worth it, then I'm not going to put my money into it. If that makes sense. Uh, but those are just two methods that you could utilize to help you out. Do you think you're going to be more of a dollar cost averager, like where you're just going to put it in and?
Yeah, for right now, I'll probably just put it in until it gets, I don't know,
Yeah.
substantial. And then once I have quite a bit of money in there, I'll probably start. I'm still going to pay attention, but I'll probably I'll do research, like you said, and see different things.
And for between you and me, since we're both in the same league, like, bro, it's exactly like fantasy football, no lie, because you're picking like your players for the week. Like you want, if are they injured, are they hurt? The same thing with the company. Is the company doing good? Is the company doing bad? So obviously, as a long-term investor, you're not going to trade people out, like trade companies out as much as you do with the fantasy football, but the same research you do with a player, especially like a player you've never heard of before, but he's like the top one on the list, and you're like, let me go see what his stats are. Let me see what he's been doing. It's the same thing that you do with the stock market. So I know you got second place to me in the fantasy football, but I think you still have the tangible skills in order to be successful in picking the stocks because it's the same exact concept. That's the way I saw it. Um, and I think that's what got me hooked on it. Go ahead, man.
So if I wanted to create like once I get into it and I wanted to have I don't know, let's say like a pie for technology, a pie for whatever. Um, this pie I have now, I have like Apple and Microsoft. Could I move those into the other pie?
You can, but it's a little complicated.
Complicated.
Yeah, so you just all you have to do is it's not really complicated. Uh, you just have to sell everything you have in that stock and then buy it in the pie that you want to. You won't get charged anything. They won't tax you on it. It's not a taxable
Nah, I ain't worried about it.
it's not a taxable event, but you're just buying it and selling it, and it'll disappear in one pie and it'll appear in the other pie uh, the
Gotcha.
next time you're trading. They're working on a way to make it simpler. Like they didn't think about that before, but they're making on a way to make
So if you get it up to like, let's say you get lucky and you get it up to like $20 million,
it
you still don't have to pay taxes unless you sell
on the Roth
and make
IRA.
a gain.
Yeah, you
No,
don't.
on this.
Oh yeah, you don't sell until you you don't get taxed until you actually make the profit because it's not a profit until you sell. Because that 20
Right.
million could turn into 10 million the next day if the market crashes or something. So
So when you retire and you pull this out, you pay taxes on it.
Yeah,
from the gain?
on the taxable account, yes. On the non-taxable account, no. So on the Roth IRA, you will not pay taxes on it. But
Right. Yeah.
but on this one, yeah, you're gonna be taxed capital gains every time you make a like you're gonna be taxed two ways. So you'll be taxed on your dividend receptions. So you get taxed on those, which is obviously right now you don't have much, so your dividends aren't going to be much. But like the global medical REIT, that one is going to give you a dividend, and you'll be taxed like I think 50. Those are more expensive REITs. The tax on those are more. They're like 20%. But you'll be taxed 20% on the dividend. Pepsi is like a regular tax, so it'll be like 50% tax on Pepsi dividends. But you're still like they're paying you
15 or 50?
15.
Uh,
There's no 50% taxes or anything like that. But yeah, that's why I went with the Roth IRA, man, because I thought about it. And I'm like, let's say my account got to 100,000 and I wanted to just stop. Uh, I would have to pay out of that $100,000 gain that I made. Not if it got to 100,000. If I got to $100,000 profit, I would have to like pay what is it 25,000 on that $100,000 profit because my tax bracket is like 25,000, 25%. So I would have to pay 25% of that 100,000, which is 25,000. But if I did the same exact thing in my Roth IRA, I wouldn't have to pay anything. I would keep that 25,000 as well.
so do you think it's smart to have both, like in my position with AT&T,
Yeah, man, of course. Like,
like a traditional and a Roth?
yeah, man. Because what you have at the 401k and the Roth IRA are two different things. So they're
Right.
so the 401k contribution I think is like 19,000 per year. The Roth IRA is $6,000 per year.
Yeah, my company matches 6%.
Yeah, so that's perfect, man. Like that's uh, same thing I tell the people with the TSP. Like only pay what they're gonna match you. Don't pay more than that.
Right.
So um,
And I'm about to roll over my TSP into my AT&T.
yeah, yeah, man, that's great. Even more. How much do you have in there?
I think close to 30.
Yeah. So you could also was that a Roth or a traditional?
Traditional.
Uh, if you wanted to, man, you could roll over that money. I'm pretty sure you could roll that over into this app as well if you wanted to.
Really? Would they tax it?
No, it's not. It's if it was traditional, then yes. Whenever you do a rollover, uh, they're gonna tax you on what you made. Like no matter what, you're gonna get taxed, even if you do it at AT&T. So because you're transferring it over, so all those gains you made throughout that time, they're gonna get taxed.
Sure.
So whenever you do your Roth,
Well, I might think about that then.
yeah, man, you could just research it on there. I think they have an option for you to roll over your uh, TSP into there as well, and that would be great, man, because your Roth would
Gotcha.
start with those $30,000, and you could go
Yeah.
you go freaking nuts with that.
Yeah, I'm really gonna start getting into this more. I mean, you know my situation, so I wasn't able to, but now that it's over, I should be able to put more of my attention into it because I don't want to put my money in there and not have it for later or whatever. But yeah,
Yeah, man, and now you have that raise again, man. Like that's extra money. It shouldn't be
yeah,
it shouldn't be extra money for like let's go party. Have you saved a lot of money since you've been like all the restriction and stuff?
yeah,
Yeah, that's good, man.
yeah. Basically, what I do is restriction. I don't really buy anything anymore. Like I have everything I need, and I do. I listen to a couple of YouTube videos, like at the gym that you recommended, which made I don't know, really, like I really understood it. So basically, what I do is I have a spreadsheet with all my bills on it. Pretty much got all my debt paid off, and then after I pay my bills, I leave myself like I don't know gas money and lunch money if I go out to eat or whatever. and then the rest I just put in savings.
All right. So you got to tweak that a little bit, man, because right now, because of the yields, the 30-year yield, the 20-year yield, like all the treasury yields, savings accounts right now are at an all-time low. So even there's websites where they have high tax accounts, high interest accounts, where they pay more than your bank because they don't have the brick and mortar. They just a website. So even those are at an all-time historical low. So what happens with that is that you're not keeping up with inflation. So the average inflation every year is 2%, and your savings account, I'm not sure, but I would assume is like at 1% or a little bit over 1% for your savings account. So you're technically losing 1% of your savings account every year by keeping it in just a regular savings account, which you should have like a emergency fund. You should have money in there that in case worst case, AT&T says, to, it was, thank you for your service, but uh, we're gonna give you a hat plaque ceremony. But yeah, if like worst came to worst, you would be good for like 3 to 6 months or something. So the emergency fund is great to have in a savings account. But besides that, man, you're actually losing. Just think about that. You're losing money keeping it in savings because of all it is inflation, which is a natural thing that happens every year. And because of what happened with the virus and all that, they're predicting something like superinflation or hyperinflation, which is like kind of double of what the normal inflation is. So
Awesome.
yeah, we're just another thing to think about, man. Like you don't want to, you may want to tweak how much you have where, and it don't only have to be stocks that, let's say you wanted to take 20% of your, and put it into investments. Like I know you're already going to invest in another house, that's great. But there's other ways to invest out there, man. You could buy physical precious metals. You could buy physical gold, physical silver. Give me a second. I actually purchased some here in Australia. Uh, I got some physical silver coins out here. Uh, I
Oh,
bought a,
nice.
yeah, I bought a bunch of them, uh, and a lot of these are more for numismatic value, which means that they're not like you're not, the value of it is not just based on the silver, the actual silver component. It's also based on the like the year that it came out, the markings on it. There's other ones out there like they have Bart Simpson on it and stuff like that. There was one with Bart Simpson that sold for like $100,000. But
Wow.
yeah, so you could spread your wealth into different places. You want to be fully diversified. That's just another option for you. I don't want you to feel like stocks is the only way to go. There's Stocks should be a big part of your portfolio just because of the way
Yeah.
things are rising right now. But um, precious metals is more like it's not something you're gonna see your money double or you want to see your money double, even though they're flying up right now. Like I paid an average of $17 per ounce, and it's currently like $28 an ounce. But I didn't even buy them for the profit like that. I bought them because because of inflation. This is like a savings account that doesn't deflate throughout the years because you could always go and
Gotcha.
it's just another way of currency. They have cryptocurrency. They have all this stuff out there. But you have other options. So it's not just take that 20% and put it into stocks. You could take 20% and put 10% into stocks and 5% into something else, or start go ahead, man.
Do you know anything about I saw this a while ago and it sounded interesting, but like Fundrise, like real estate funding?
I've heard of it. What do you know about it?
Nothing. That's why I was asking.
Yeah, it's kind of like the REIT, like that REIT you have. All it is
Yeah.
you're instead of investing in a stock, you're investing in a property, but The reason some people like doing it is because they don't have to deal with tenants, or they don't have to deal with like the negative stuff that comes with owning a house. You know, like your tenant leaves, you have to go and
Gotcha.
so with the Fundrise thing is like a collaboration of investors are getting together to do it simultaneously, but there's fees that come along with it because somebody has to manage that property, no matter what kind of
Right.
property it is. But there's so many different ways to invest out there. There's also this one website, I can't think of it, but it's a website where you're the bank, where you could put like $3,000 in, and people borrow from you, and they'll pay you interest on it. Um, so that's like another. There's a bunch of stuff. I don't know what that one's called. I can't remember. Have you heard of that one?
Yeah, I have. I've looked at like different ways, like top 10 ways to invest or whatever to be more diversified. And there's some pretty interesting stuff on there.
Yeah, man. Um,
But most of them you got to pay somebody to
yeah,
kind of do it for you.
it's like they say, it takes money to make money. You know, so
Right. Yeah.
and I think that's why so many people are flocking into stocks right now, because there's no brokerage fee anymore. All these trades we're making right now, we used to have to pay for them. You know, they used to be like $7.50, or even up to, I think Ameritrade and E Trade used to charge like $13 every time you bought one share, and every time you sold one share was $13.50. So
Oh wow.
yeah, man. So and they didn't have this fractional share before, so that's a big reason a lot of people are flooding into the stock market right now. Besides the fact that there's no sports, besides the fact that there's like people stuck at home and they don't have much to do, um, which has
Right.
it has really risen the valuation of a lot of these companies. Um, so that's the big reason I do homework, man, because a lot of companies are overvalued right now, um, based on just the fundamentals. But that's like a whole concept that would take like a few hours to explain. Um, what what else?
So when you said that, I forgot what you called it, average dollar sharing or whatever.
Yeah,
What'd you call it?
dollar cost averaging.
Right. Did you have like when you had your set amount that you invested each week or whatever? Did you have it broken down to where like you do $25 per stock, or how did you manage that part?
The first like month I was doing just buying from the pie. So because you don't have to go to the individual stock, you go to the pie and click buy on the
Yeah,
pie, and it'll just buy from all of them in order to make it 100%. So
I got you.
that's what I was doing, and I was at that time I was doing just 10% of my paycheck, but now I'm doing like 30 to 40% of my paycheck, that I'm putting into it, uh, and it's
So if you did $100, it would just spread it out equally.
if you put it wouldn't spread it out equally. It would spread it out on the percentages based on how
On your
much.
percentages, that's what I
Yeah,
meant. Yeah,
but yeah, it wants to make it 100%. So if you have a stock that's overperformed or gone above the percentage that you want, then next time you buy, if you bought the pie, it would put it into the other ones, you know, to and you could go and adjust the percentages. Like if you wanted Apple to be smaller or bigger, you could change that if you wanted to.
gotcha.
Yeah. Uh,
Makes more sense now.
yeah. There's also like there's 4,000 stocks out there, man. Like there's always a good deal somewhere. But the problem with people today is they're finding the good deals online on YouTube or on websites or on Instagram, and they don't realize that they're looking at something, and if you go and look at how many views the person has that they're looking at is like 150,000 views. So they just saw the same thing that 150,000 other people just saw.
Right.
So I like to go and look at other places, you know, like those other 3,000 stocks that people don't even know the names or never heard about or anything like that. And I've been successful, man. I've like, there's some companies where I've like 5x my investment on it. Like I would put in $100 and I would make $500 on it. You know, companies that
Oh wow.
companies people never heard of, you know. So there's great deals out there. The good thing about M1 Finance as well is that they don't have penny stocks. Like they don't have a lot of those penny stocks that people are flooding into. So it kind of saves you from yourself a little bit. But
Gotcha.
I think this app is perfect for you, man, because it's like fire and forget. Like you don't have to sit there and be like, oh snap, oh do this. So
Yeah.
there's for example, Robinhood. That's another app. I know you heard of that one. Uh, people use that one as well, and I'm not criticizing it at all. Like any way you can invest, I think it's great. But a thing they have is a thing where you could limit your order. So let's say Pepsi's currently at 143. Somebody could put a limit order, which means that it'll go through the night. So they'll say for 142, I'll buy a share. So what happens is it won't drop to 142, and they won't buy the share that night. So like a lot of people miss out on good opportunities because they're trying to figure out how low they could put that limit order in and things like that.
So it's kind of like bidding on it.
It's not a bid. It's saying this is the most I'm willing to pay for it today.
Gotcha.
And if it reaches that, and somebody's selling it at that point, then you'll have a trade. But if it doesn't go down that low and you wanted the stock that day, you won't get it because obviously the natural human reaction is to try to get the best deal. So you're going to try to put it as low as possible. But some people are unrealistic with it. So I just like this one is like really fire and forget. If you want to buy, you buy. If you don't, you don't. I would make sure that I forgot what it's called. It's called, give me a second, let me look at it. Um, the auto buy. I think that's what it's called. Auto invest. I would make sure that's off. I don't know if you have it off or not. If you do decide to start a Roth IRA, then the first thing I would do is turn off auto invest because I didn't, and I had the minimum 500 in there, and then I had a few stocks in there that I was interested in, but that first window it bought $500 worth because I forgot to turn off that auto invest. Uh,
Oh wow. Yeah, mine's off.
but when you go to your
So
go ahead, man.
once you start your Roth and you do the 500, is there a specific amount you have to do each month, or is it whatever you want to do?
No, whatever you want, man. There's no specific amount. Just there's a minimum startup of
Gotcha.
500, but you don't have to spend those 500. If you wanted to do 500 now and just use those 500 until next April, you could do that if you wanted to. Like you could buy a little bit every day if you wanted to, but you don't have to buy. It's just a minimum deposit to show that you're interested in it. You're really serious about it, and they're not wasting an account on you. So again, but you don't have to use that right away. And then you have until April to do a little bit in there until you get your 6,000 if you want to, but it's not a mandatory thing.
This is the maximum.
Yeah, it's just a maximum they let you do. A few years ago it was
So
5,000.
when do they tax it?
They tax it when you got your paycheck. So it's considered after tax. So you're putting it,
Ah, okay. I got you.
you've already been taxed on that money.
Gotcha.
Yeah. So the only difference with the traditional is like they pull the money out before you're taxed, and they'll get you on the back end.
Gotcha.
But yeah, man, Roth is like a hidden gem. Like I wish I would have known about it years ago. I knew about the TSP,
Yeah.
but I didn't. Nobody sat down and talked to me about the Roth IRA. How great of a deal it is. Um, there's
Right.
also ETFs, like there's like that REIT you have. There's also ETFs where it's like a bunch of different companies. You have one, I think, the Vanguard. There's a bunch of them out
Yeah.
there, but are you? I'm sure you're up on that Vanguard, right? One, right?
Yeah. 74 cents.
Yeah. So I would consider selling that one entirely, man. Just because I'm gonna do a subsequent video on this, but I don't believe in ETFs anymore. For just because like you have to pay, even though it's not much, you still pay a fee to use it. Uh, I think that one is like $3 for every $1,000 that you have invested. They charge you. But which one do you have? Which ETF do you have?
Vanguard S&P 500.
All right, so you have the VOO. So there's 500 companies in there. So basically, what that ETF is fractional shares. You have a fractional share of 500 different companies right now. And I did that in the beginning, but then I thought about it. And I'm like, there's 500 companies in here that I don't know. I don't understand. Like how many companies in here.
Right.
So I want to know what I'm investing in. So that's why I got rid of the ETFs that I had, and now I'm like more concentrated on individual companies. So what happened? This is what happened with the S&P 500. Um, the the market crashed, all the stocks dropped, things went down, and then obviously there's companies that came out of that great, like companies in the tech sector, medical sector. They came out of that March lows and they've like done great. But there's also companies in the S&P 500 who have underperformed. So what happens to your ETF? It's kind of like dragged down because there's more companies doing bad in the market right now than there is doing good in that S&P 500. Does that make sense? You have like
Yeah.
10, you have like 5 companies that are doing great, which is Microsoft, Apple, Facebook. They're all doing great. But then you have all these other companies who are keeping that ETF from like totally taking off. So if you would have just invested in these 5 companies that were the best ones in the S&P 500 on your own, one, you wouldn't have to pay the fee, and two, the percentage that you would have benefited would have been a lot greater.
So there's not a maximum number you can be invested in.
No, you could, if you wanted the S&P 500 ETF, you could even go through and look at all the companies in the S&P 500 and pick out the ones that you want and say, I want these companies and that's all I want. And then you could invest in just those companies and take away the ETF. Like the ETF is just there to do the work for you. So for example, in April, I believe, Macy's got kicked off the S&P 500. So what happens then is they have to do a rebalance. So they have to sell all the shares of Macy's and then buy all the shares of whatever new company came in, and you're getting charged for that. It's not much. You have to read the prospectus document, but there's different ways you get charged as well besides the fees that you pay.
So, quick question. It says current value of the Vanguard is 22.59. So if I was to sell it, I would get that back, and it would just go back into my overall funds.
Yeah, how much did uh, current value, is that how much the stock price is right now? I can't see your screen.
Whatever.
Oh yes, those $22.59 you would get back. If the market is up, if the S&P 500 is up on Monday, then you would get more because that price would be higher.
And when you sell it and you get those funds back, does it automatically invest them back in your pie,
If
or
you
do you have to do that yourself?
if you made it zero, it would. But if you just sell it, then it'll go back into your cash balance at the bottom, and you could have that to, if you wanted to send that money back to your checking account, you could, or if you wanted to buy something the next day, you could do that as well.
I got you. Okay, that makes sense.
Yeah, man, and this don't have to be a one-time conversation. Like if you ever you find a stock, or some ways I found stocks are like just driving, like in Japan, I'll see a company that I've never heard of before, or here in Australia, like I'll see a company I've never heard of before, and I'll, do some research on it and be like, damn, this company actually does a lot. There's a company we work out here called Talus. Like we have a contract with them. So it made me go look into what they do, because I know just us, we pay them a lot of money. Like just for my exercise, we've paid them over $1 million, and we're only here for like 6 months. So they take care of the whole Australian Defense Force as well. So I went and did research. And I'm like, wow, this company is freaking huge. So you could just be driving down, wherever you are and see a company or see something you use a lot. Who makes that chair you're sitting in? Who makes that keyboard you have? Who makes the monitor? So I know you play PlayStation a lot. Uh, Sony. Um, Activision Blizzard is the one that owns Call of Duty. So these companies are all over the place. And as now that I don't look at them as like the way I used to look at like Gucci or like these other brands.
Right.
I want to wear it. Now I'm looking at it like I want to own these. I want to own some of these companies.
So do you think I don't play it, but excuse me, Fortnite getting pulled from the App Store and the Google Play Store, you think that'll hurt their money at all?
No, it's not gonna hurt any of the parties involved. Fortnite is upset about it, so they're being bitter about it. But Fortnite has other platforms as well. Like Fortnite is on PlayStation. My son just
Yeah.
my son just downloaded Fortnite. I saw the notification. He just downloaded Fortnite on the PlayStation. So they have other means. I think they're also on the phone as well. Like you could download it on your other devices as well.
Well, that's what I'm talking about. They just took it out of the App Store and the Google Play Store.
Yeah, so I got to do more research on it. Does that mean like the people who had it downloaded can't use it no more?
Yeah, they can't. I don't know if they can't play it anymore, but they can't update it, and no one else can download it. Something about who is it? Blizzard that owns them, I think.
No, no. It was somebody. It was Epic Games. Epic Games.
Epic Games, right? Yeah. So they were mad because Apple charges like I
30,
don't know some kind of percentage. Yeah,
30%.
and they found some other avenue. I don't know. There's a lot to it, but basically Apple pulled it from the store, and so did Google Play Store.
Yeah. It's it's gonna take a toll, but I don't think Epic Games is publicly traded on the market.
Gotcha.
Uh, if they are, I think they're raising money in order to go public. But I gotta check, but I don't think they're publicly traded. But yeah, man, little things like that affect, and it's good. The way you notice that, if they were publicly traded and you own them, now you have to make decisions in your head. Like you have to think before everybody else. Like, damn, is this how bad is this going to affect them? Do I want to sell them? Do I want to buy them? Same thing in the opposite spectrum. For example, Microsoft is trying to buy TikTok. You own Microsoft right now. So if Microsoft doesn't buy TikTok, even though nothing changed, that is going to seem like bad news, and then people are going to sell the stock. Like that's the kind of things that happen. Microsoft is still the same exact company, it's still as great, but because the deal doesn't go through with TikTok, it would cause that stock to drop. And if you really believe in that stock, then you would buy it. Uh, People aren't paying attention that there's other companies that are also trying to buy TikTok. I think Apple was one of them as well that may have put in a bid. And Apple buys it out of the blue, that stock is going to freaking skyrocket, you know? But
Interesting.
what else? What other questions you got?
That's really it. I just wanted to get more comfortable with this this app, website, whatever you want to call it.
Sounds good, man. Try to jump in those chats we have more often. I make them late. That way, it's like early for you and you could get on. But
yeah, I will.
I make them on Sunday night here, so it's like 8:30 p.m. here. So that would be like 6 your time.
Y'all have them every week now?
Since I've been here in Australia. Yeah, I've been doing them every week, every Sunday.
All right, yeah, I'll try to get on it more.
And if you miss it, then I always upload them, so you can still catch up.
Yeah, I think I've watched one or two. Definitely hit the dislike button.
Hey, I don't care. But yeah, if you got nothing else, man, hit me up. You know where to reach me.
All
Everyone,
right, man. Appreciate it.
everyone else, I hope you got something out of this as well. Don't forget to like, comment, and subscribe, even though he hasn't yet. Uh, yeah. But until next time, take care, Larry.